Good morning. This topic today is Minnesota specific. I'm sorry to say this one is just for my Minnesota business owners. The only people that are going to matter for this one. So if you're not a Minnesota business owner, just move on to the next, or continue. Maybe you'll learn something. Maybe you're going to be a future Minnesota business owner. This is for pass-through entities only. So a little subsection. Minnesota business owner that owns a pass-through entity. What's a pass-through entity? S corporations. If you don't know what an S corp is, check out my other videos. Partnerships, right? Those are considered pass-through entities. Those entities file their own taxes but issue what's called a K-1 to the shareholders, and then they pick up their share, proportionate share of the gains or losses that happen in the calendar year or fiscal year if it's a fiscal year company. This is all about Minnesota and this new tax called the Minnesota PTE Tax, pass-through entity tax, right? PTE, kind of, I guess, pass-through PTE entity tax. So totally fine there on that type of thing. But what we are going to discuss is how great it is. It's flat out for the first time. I mean, Minnesota, living here, it's great. It's a great state. It's been a little crazy as of late, with all of the drama that's happened in the cities. However, it's really a pretty great state. You get all the seasons. It's lovely. However, it's heavily taxed. For being in the Midwest, when we don't have beaches and we don't have, Broadway, we're paying a heavy tax rate. Our top tax rate right now is 9.9%, and it doesn't take much to get there. It's a good income to get there, but it doesn't take a ton. It's not like you got to make millions to pay the 9.9. It happens pretty quick. So the problem is when you pay a lot of state taxes at the individual level, because the SALT limitation at the federal level is $10,000. Basically, we pay all these state taxes and we get nothing for it. Normal states, like if I lived in Florida, I don't pay a state tax, but I'm going to be able to write off my real estate taxes and my sales taxes and kind of get to that 10,000 mark, and it's kind of a win-win. But here in Minnesota, I still have real estate taxes, right? I still have sales taxes. And when I add my Minnesota income taxes, I'm way over the 10 grand. I can't write any of this stuff off. Congratulations, welcome to the Minnesota PTE tax. This is an entity level tax, folks. This is basically where your state taxes moving forward, if you understand this, you will probably never be paying Minnesota taxes personally ever again. Most likely, most of your income comes from the business that you're working in, your pass-through entity. That entity is going to pay the PTE tax. When it's an entity level tax, this is complicated, but when it's an entity level tax, because the entity pays the state taxes, they're allowed to take a deduction over on their federal taxable income at the entity level, meaning that K-1 that I might get is actually going to be lower than it would be if I paid my taxes personally. That's the whole gist of it, right? Minnesota came out and said it's 9.85%, whatever your profit is, pay it to us by March 15th, right? You're going to take that, whatever that dollar amount is, in a credit on your personal return, right? That's going to come through those K-1s. And most likely, because it's at 9.85 at a flat rate, you're going to get a refund back because most people don't pay an effective rate of 9.85. So basically the concept is I'm going to use solid numbers, easy numbers, 100 grand profit. In the old way, 100 grand lands on your K-1, comes down to your personal return, you pay your federal, you pay your state, have a nice day, right? Now, 100 grand, pay the state at the entity level, call it $10,000 roughly. That 100 just dropped to 90 at the federal level. The feds can only tax me on 90 now, not the full 100. In essence, I've been able to write off my Minnesota taxes because of that drop in that K-1. It is a big, big, big deal. If you're not doing this and your accountant has not talked to you about it, call me. It is so good that everybody needs to do it. If you've got profits, I don't care if your profit's 20 grand, pay the PTE. It's too good for that. Now, caveats, multiple partners out of state, don't feel like you want to pay the taxes for certain partners that might be passive. That's a different conversation. But a lot of S corporations, for example, are one owner S corps that make money. A ton of them are. It is an utter no-brainer for those to be able to do it. There really isn't much of a downside. Now, cash basis and accrual, just kind of understand. Cash basis get to reduce the K1 in the year that they paid it. Accrual gets to reduce it because they actually get to accrue it. They might not actually pay it till March 15th of the following year, but they still get to take the deduction because they're accrual basis. Whole kind of different concept. I'll do another video on cash and accrual just so you kind of understand the difference. But that's the skinny PTE tax, Minnesota. It's brilliant. It's awesome. Make sure you take advantage of it. All right. Have a great day.